Good evening, everybody. Market analysis, we're still above this level. It looked like pretty much the Dow came back and even used that level almost for we'll try to get that a little bit more exact. Right about there. Where it peaked out over here, bottomed here. So if these markets open positive tomorrow, essentially you've got a double doji setup, which would imply more upside. Now, part of the analysis today, or the watching the markets today, was were we selling off after a doji, or were we still in an uptrend? The fact that for a while they sold the Dow down, but here's the important factor. But even though the Dow was down 84 points, it was trading above where it opened, which is an immediate indication that the buying was still there. And even though it opened lower, there was still buying going on by the end of the day. So when you see a market pull back, the Dow's off pretty hefty, that's when you can quickly take a look to see what's happening in the NASDAQ. We saw the NASDAQ today relatively flat most of the day. It did trade off for a little bit, but then traded positive. The S&P, same scenario, and the transportation index also came back up. So we could pretty much tell during the day that there wasn't any rampant selling, just kind of backing and filling. It still adds evidence that we're in an uptrend as long as we're staying above the T-line. So with that, well, let's take a gander. So here's part of the entry strategy. This one opened up, but didn't go anywhere, started trading down. Now, what would be the reason for not jumping into that one immediately? Because the Dow was opening down and trading lower. So if you're sitting here watching the market, just common sense says, well, it doesn't look like there's a whole lot of buying strength going on in the market. I better just hold off. I'd rather pay for it up here knowing that they were buying versus watching it drift off as the market is drifting off. So that would have kept us out of that bad trade. This one opened flat. VC is now nudging the 50 with lots of room left in the stochastics. I'm just going to go through some of the ones that we've been recommending. Here's BIG. You can see the slow curve breakout on BIG today, which means keep an eye on this one. There's your little best friend gap up through the 200. That's STGN, Scorpio Tankers. Oh, that's one. CPRI didn't execute yesterday and didn't execute today. But if it comes back up through this level, what can you pretty much, oops, that's not what I want to do. What are we watching going on here? Kind of see the big fry pan bottom if it breaks out. So this is kind of the visual analysis of knowing what your patterns look like and where the breakout levels are. AVID, ever since the gap up breakout, you stay long. Form, ever since the Morningstar gap up through this top of this wedge, you stay long. Now, obviously, as soon as you get up in the overbought area, I say obviously, simple trick is, well, where no matter where they open it, you put a safety stop right here at the open, because you don't want it to come back through that level. Because just mere common sense that if you're in an overbought condition, they shouldn't trade back below this level. In this case, on Amazon a few weeks back, when they did come back down through there, where do you think they were heading? Right back to the T-line. So the repetition of what human nature does time after time just makes it very simple to make an analysis of what's happening in a market or any price trend. So, again, that kind of that breakout through a wedge type formation just puts you in a situation where the probabilities, not the probabilities, it's the reoccurring likelihood of what happens after a wedge breakout. Well, everybody that's trading the wedge is buying, and that creates your next price move. So, very simple to analyze what a pattern should be doing. As we can see in Papa John's, big fry pan bottom, kind of broke out, pulled back to the T-line, did a Morningstar signal. Everything's hunky-dory for a classic setup, except for the fact that if this is your Morningstar signal, where should this not trade? It shouldn't trade back below the open of that candle, number one, and definitely should not close back below the T-line, because what's that do to your J-hook trajectory? It's obviously deleted it. You want to close out that position. Cena, ever since the kicker signal down here. Again, this is why the two-day training is just kind of a very solidifying training session to get your eye acclimated not only to the signal and pattern, but to what I would call the most relevant confirming indicator of human nature, the T-line. So when you start seeing this type of thing, look at all the things we can add up right here. A scoop pattern, a kicker signal, a close above the T-line, then a positive open told us that this level right here was not acting as resistance. Where do you think the next target's going to be? Right up here. All right, I'm showing this, and I shouldn't show this one. Got kind of a fry pan bottom. Nothing real exciting except in the underground. There's some rumors going on. So usually you shouldn't be chasing after rumors. However, if you can look at your chart and see that it's still in a pattern, at least you're not like I used to be, where I'd hear the rumor that they're being bought out and I'd be buying up here because it looked like it was going to be bought out and I was going to catch a good one. I never made any money on a rumor. Except now I can at least put myself in positions where if there's a rumor and the pattern is working, at least I've got a little bit of security that something good might happen. SUPN, scoop type pattern, still working. Safety stop after today's doji, just below the low of today's doji. I guess I can figure. What should happen from here? Well, if they do a doji sandwich break out of this level, where do you think our next target's going to be? E-Frog. If this one opens positive tomorrow, another doji sandwich, where's your next likely target? At least the 50-day moving average. What was so compelling about this? Look at the series of dojis. Okay, the biggies. We saw strength coming back into the gold stocks. JNUG, after the left-right combo Morningstar signal, now a gap up above the T-line. First target, second target, at least an uptrend, making a lot of the gold stocks at least a viable candidate. On as far as a sector. Labu, notice, I say notice, this is something that should all be ingrained in your analytical perspective. If they come down and bounce up off the T-line, the significance of that, as I've often repeated, is that nobody has the T-line on their charts. So it's hit a natural support level. When we put the T-line on there, we just have a graphic of what that natural support level is. Now, another reason we saw the fact that the markets were not selling off today is you could see that Apple was still trading positive after it broke out through this level. And notice once again, when it pulled back, what was the significance of this change of direction? They couldn't close it below the T-line. That gets us set up for knowing that the selling strength is not there, the natural support is there. Get ready for the next wave to the upside. That same scenario can be applied to Amazon. Notice when it pulled back what they couldn't do. They couldn't close it below the T-line. Once again, that is a significant factor because nobody has the T-line on their charts. So this was the natural area for that support to occur. NVIDIA, same scenario. Look at our little gap up from a doji through the resistance level. Uptrend, maybe up here, wave 1, wave 3, up to the 200-day moving average. So it's easy to identify a chart that has a pattern that has some relevancy to it versus looking at a chart like this, Netflix, that just has nothing. So whenever you see that you have nothing, move on to something else. This will become relevant at some point. You're going to see a signal or a positive trading. Right now, move your money to something more better. Oh, Apple. If I was buying Apple now, oh boy, you can, but you've used up most of your buying strength. So, no. I guess my answer is no. We want to be buying at points that makes it logical to buy. It's not logical to buy up here. It's logical to hold, but not to buy. Now, this makes more logic to me because it has just broken out. Oh, I got to move that button away from there. There's got to be a way to do that. I've hit it so many times. Now, this makes much more sense to me to be buying here with the anticipation that if this was wave 1, wave 3 should take you up to about the 95 to 100 range. So I'd rather be looking for something like that versus something like this where the probabilities were great here. Now it's just a hold. Well, remember, your stochastics don't matter. I mean, you're not in the overbought area and you've just broken out of a wedge. And look how long your stochastics were from here to basically here. So we're not buying or selling stochastics. We're buying the candlestick signals and patterns. Tesla. So this is where your eyes should be trained on. Which direction does Tesla look like it's moving? Right now, nowhere. If you can't really figure out what this is doing and when, I mean, it could come back down to the bottom, it could go back up to the top. But if you can't figure out what it's doing, take your money and go someplace else. Remember, out of the 10,000 trading entities, we're going to be able to find things that make high probability sense. And part of that, again, is going back. This is why we've been kind of pushing the T-line analysis. Little doji, gap up, best friend in new age beverage. Man, that was a big price move. What should we be doing? Well, we've got a much more clear analysis of what to do based upon this signal, but there's probably going to be a lot of strength in this. Now, if it opens positive tomorrow, yes, you have a strategy. If it opens lower, you know that probably it's going to back off, and you don't buy it unless it comes back up through the close. But the fact that we have a best friend signal puts us in situations where we know what the outcome should be. Our recommendation on J-Bell was based upon that best friend signal. SYMC did a doji gap up. And where did it gap up? Through that level. What do we expect? 45 degree to come off of here. So, will that happen? Don't know, but the probabilities of seeing a reoccurring price move based upon a gap up type situation, especially through the T-line, it just gives us that much better prospects of a higher probability of calculating the outcome. There's our best friend, AMC. Look for a 45 degree if it continues trade positive from here. CLDR. Which direction do you think this is heading? Well, we started out with some buy signals. We had the little stutter step. Now we've got a best friend signal gapping up. Where's our next target? At least to here, and then possibly up here because there's a gap area to fill. So when we can visually see the strength of a new signal and the potential targets, now if this was a 4% move up to here, yeah, it's not worth it. If this is a 14% move or a 18% move, yes, it makes it worthwhile going after that price move. Whoops, I skipped a few here. Boot. Now we have at least knowing what to do after the message. You could be buying on positive trading after today's trading is telling us that the selling has stopped. Alaska Air. Very simple. The uptrend remains in progress. Look at your doji sandwich off the T-line area. So this would be a very simple trade. A doji, bullish confirmation, close at the T-line. It trades higher the next day. You can be buying it because you know the probabilities are heading in the right direction. This one is this is the type of chart that you want to really be able to identify. Dang, Jiminy Christmas. Dang. rid of that. Let's move it away from that button. Anyways, wave 1, wave 2, and this is where you want to add up everything. A left-right combo. Positive open the next day, telling us that it's confirming the left-right combo, telling us the T-line is not acting as resistance, telling us this little downtrending channel is over, that wave 1 and wave 3 are likely going to be about the same magnitude. Wobble breakout on ANAB. Notice how it opened lower today after the gap up doji. Now what do we need to see? It better open positive and trade positive. If it opens lower, telling us there's more selling after the gap up doji, where do you think it's coming back to? Maybe here or maybe here, telling us that the resistance level is now going to be tested to see if it's going to act as support. Now, is that all that bad? Not really, because if it starts selling off, you take your profits, and it comes back down here and does a hammer or a doji or something, you know you've got an extremely high probability trade set up for a J-hook that's bouncing right back up off the resistance level that is now acting as a support level. And something like Bold, which still had the prospects, if you got back in, notice what it did today. Right back at the level that was having trouble getting through, it did a bearish engulfing or bearish evening star signal. What'd that tell you about the strength of this trend? It's over. You close it out and move on to something else. So this is part of the emotional elimination process that candlesticks have provided to me through the years. Again, starting off as one of the worst investors in the world, I didn't make my decisions based upon anything but what I thought should happen in a price trend. Now, at least I've got the visual elements of the probabilities of what should happen at certain levels, because that's what human nature does. So if I had bought back here anticipating a breakout, it doesn't emotionally bother me. I said, that one didn't work. Close out the position. Yep, that one didn't work. Close out the position if I was in that position. So now I can easily say, this is what the price move is telling me. Go on to one where the price move is telling me I've got much better capabilities or probabilities. You can see what happened to Dave & Buster's when it broke up through the 200. Look where it came back and tested today. Right smack dab on the 200 and came back up. This makes for a very good entry. Let's say it comes back up through today's open. What that tell us about the support level? Is acting as support, your uptrend is still in place. So the reason we're going extensively into T-line analysis is if we can see the signals, doji, long-legged doji, hammer, gap up, confirmation, close above the T-line, that right there tells us not only have we confirmed the reversal signal, but we've confirmed an uptrend. If we didn't see it on that day, let me make this bigger, and we did our scan and found it that night, just have a very simple entry. If it opens positive, it's confirming this signal and telling us it's breaking out and telling us the T-line's not acting as resistance. Will we get in a move like this? Hopefully. And at least the probabilities of being in a move like this are much greater than just finding an uptrending stock in an uptrending market. ETM, indecisive doji sandwich through the T-line. That's the confirmation. Now, a lot of people, I say a lot of people, it's kind of my same nature too a while back, was, man, I want to find the best trades. I just hate it when somebody else is out there and said, oh, look at, look at, I'm going to pick out, oh, I bought this on the open today and made big profits. I'm sitting there thinking, man, why didn't I get in something like that? I'm going to find something that looks like that tomorrow so I can be in it. I always kind of like shoot myself in the foot. I would rather find 10 positions where I know the probabilities are in my favor, that the compounding effect of being in 8 out of 10 good positions is much better than trying to find that one day high flyer, that big price move. Through the years, what I've discovered though was if I just pick out stocks where I know I'm in the right direction, that eventually I'll hit that big price move. Now this one, AKBA, what we're doing right here, and look where we close. Look where your stochastics are. If this opens positive, what do you think's happening? You're still going to be in an uptrend. How strong? Don't know. Just know that you're in the right direction at the right time. I'm looking for things where I know the probabilities of a breakout is likely to occur. Like a situation right there. And notice how you can evaluate an uptrend. You had an uptrend, you had a morning star signal that closed just above the T line. What does that tell you about a positive open the next day? I told you that it was confirming the fact that you had a morning star signal in an uptrend or starting the uptrend again. Where's your next likely target? And we're up near the top of that trend. Where am I looking for a breakout? If it comes back up through the 200, what do I got going on? Wave 1, wave 2 of a bobble breakout gives me strong upside potential. Yeah, SPI always had that fear of not being in the trade that somebody else hit and made big profits, and I'm thinking, man, why didn't I find that? Well, I've discovered over the years that just being in a lot of good trades compounds your equity that much faster. Freeport, I can see the pattern. Is this area relevant? Certainly. Right here, where it kind of topped out before. If it goes through, I've got another wave going out of my fry pan bottom. Now, I could have been buying here, hoping that it got up to this level, or I can be buying here knowing that I am at a breakout. That's Freeport. There's Kara. Broke out today. Now came back down to the lower end of the trading range. If it opens positive, tells me I've got wave 1, wave 2, kind of a wedge formation going into wave 3. And it's doing it right now. I don't have to wait around 3, 4, 5 days to see what's happened. I know it's already broken out. And ACRS, you can see it. Now if it trades positive, kind of breaking this downtrend, breaking the 50, that's where we can see it setting up. And once it starts confirming you can pretty much guess that everybody else that was watching is now starting to jump in after they start seeing it move. That's part of that. Where do most people buy? They buy exuberantly at the top because they have to be convinced that the bulls are there. So these are setups that I like. You see a bunch of dojis and then bullish confirmation. That tells you there's probably going to be a lot more upside. Remember, we're not buying the stochastics. We're buying the pattern breakout. What it did right here. It was in the overbought for a month. That didn't change the direction. The only reason you want to use your stochastics is if you're up here in the overbought area and you see a sell signal. That becomes relevant. Right now you're seeing a pattern breakout. So stochastics may be in the overbought area for the next month also. So don't let the stochastics be a deterrent. Stochastic should be an indicator kind of telling you where you are. Now, if you're in an uptrend and you're up in the overbought area for 3 months and there's no sell signal, then those stochastics don't tell you anything other than you'll be a little bit more diligent looking for a sell signal. What were we doing? Defrog. Series of dojis. What the heck? SDLK. I don't know why that one doesn't come up. ADNT. Series of dojis. Gap up. Started your next uptrend. Sprint. Doji. Bullish confirmation. I'd suspect this area. ELRD. Yeah, it's not very indecisive, but it's flat, and you can get ready to buy this one on positive trading. But you'd really like to see the dojis down there. This just tells you it was kind of trading flat. No, we should be doing these. I may take a gander. Should be an example of investor showing reversal about to occur. Yeah, you don't have a reversal signal, so you do have a doji. Now, what's the implication of a doji? Hang on to your individual requests until we get to the, I tell Jim to do the double line. But if you're anticipating a bobble, you definitely want to see this open positive tomorrow. And Zixi, that's got a lot of dojis here, and it gapped up today. I'd keep an eye on that one. Also, when you can analyze a specific commodity, look at crude oil. Crude oil has been you can see what happened down here. Maybe you can see what happened down here. Started the uptrend. All right, that may not be something you want to trade, but you can start trading the stocks that are related to that. Whiting Oil. I'm looking at this one right now, because where is it sitting? Right there. If it breaks out, where do you think your next target's going to be? That's not a good one to illustrate. EOG, also in the breakout mode. I had a couple other ones here. YPF. Look at the bubble breakout. If this opens positive, another one that might have another move of that magnitude, or at least back up to the resistance level. Okay. Oh, that is crude oil. Right. Let's try this one. Well, what's going on here? Maybe it's because I'm hitting the wrong symbol. Marathon, also sitting right here. Look for positive trading from here. All right, hang on to your individual ones. Till I tell Jim to do the double line. Okay, so another sector. You got the, I think this is one of the auto parts. You can see the doji sandwich through the 50. Delphi had a nice little breakout from a series of dojis right smack dab on the 50. It's at the breakout level. And CWH, look at all the lines on here. Jeez. Pretty much a wedge. Bottom of the wedge, a breakout. That could take you right back up to the 200. So the reason I'm showing this is if you can find a sector where everything's moving and they're all coming up off of good signals, the reason we recommended VC was because of the inverted hammer bullish confirmation. Is it going to resist here at the 50? It could, but look at your stochastics. There's still a lot of room in the stochastics before they get in the overbought area. So if it breaks out through the 50, making the 200 your next likely target. Wynn Resorts. This was to illustrate where you buy, gap up, where do you sell. Remember, when they gap up in the overbought condition, there's two things that will happen. One, create a good strong signal, or two, create a potential reversal signal. If I was long Wynn, if it opens lower tomorrow, I'd take half the position off. If it came back down through the low, I'd take the whole position off. This is a warning, especially in the overbought area. So these are the type of things that you can get a lot quicker grasp of when to be buying and selling at the same, or did it gap up on an upgrade? All right. But that's still, here, I guess, here's what you got to kind of figure. They upgraded it today, right? Where the heck were these intelligent analysts at this level or at this level? Remember who these analysts are. They're human beings. And I won't go into a long story, but I've never come across a great analyst. So, MAG, there's your buy signals. There's kind of a little trend kicker. There's a doji. if it opens positive tomorrow, what do we got going on? An uptrending channel. So when do you close out positions? Whenever you see a potential reversal signal, I always use if I see a doji, I use the top of that doji as my top. Because if there's enough strength to bring it up after a doji through that level, where do you think they're coming? They're probably coming back up at least to test the T line, and I don't know after that what it's going to do. Odd did a doji. Doji Harami. What's that tell me? Well, I've got two analyses going on. Analysis, wave 1, wave 2, potentially wave 3. Or, I'm in the oversold, I did a doji Harami. If they open up positive, they've hit the bottom of this channel. They're starting to bring it back up. It's time to take profits. So just having the ability to know what should happen after a potential signal, especially in the oversold area. The short on SMAR, a doji, right smack dab on the 50. What's that telling you? Somebody's deciding this is a place to start buying. What do you do from here? Well, if this opens positive tomorrow, you cover your short position. The probabilities have gone against you. But notice where this became a good short. Bearish belt hold, consolidation, gap down through the T line. That's telling you there was lots of selling pressure. Okay, I think that's about all I've got for today. Seeing if I can point out anything that's relevant. Just the fact that the biggies continued their uptrend just tells us they aren't bailing out of this market just yet. Would SMAR be a potential buy? We don't know. Just because it might be covering the short, it may not become a buy. For all we know, you could bounce up to the T line and do this type of trading. When does our probabilities become that much greater to start buying? If we see a buy signal and a close above the T line. A trend kicker like that of when? No trend kicker. But if you're asking about this move, you flip to your 10-minute chart. When could you have bought on this day? Today? Man, I don't know. But if it moved up here, wait for it to pull back. That's the worst trading strategy, is to see a strong move and you want it to pull back to let you in. Well, if it's pulling back, who's winning? The bears. Why would you want to be jumping into something where it looks like the bears are taking control? So this is a very simple process. You flip over to your 10-minute chart. I might be buying here, might be buying here, buying here. I wouldn't be buying here. I'm going to wait to see if it holds. Might be buying here. Definitely wouldn't be buying here. Yep, might be buying here, might be buying here, may not be buying here. But you can see what the overall result was. Even if I was day trading this to the point where I closed out the position here, and then notice what this pattern is right here. And that's a buy signal. And what it did right there. Now, is that any different than a daily chart? No. Candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. So if I closed out here and I'm looking at the chart and it's starting back up again, Why would I be buying back here? Because I don't know how far this move. Whoops, that. I don't know whether it's going to go here or maybe here. In this case, all the way up here. Do I buy here? Do I buy here, buy here, buy here? I look at my 10-minute chart. All right, Jim. Yeah, we have, and I'm going to probably be doing some more with Troy because there are days like this where you might use the NOF program. And man, they gap this way down. Is this dead? Whoops. Now I can see on my 5-minute chart or my 10-minute chart it's coming back up. Is it just a quick bounce or is it heading back down? Well, if I go to my NOF charts and see the volume on the bid and ask side and use their system, yeah, that's that much more evidence that the buying's coming right back in again. Oh, gold. Let's see, GCA May. Let's see, May is that K. Yeah, that's still a new chart. It's starting to come back up. If you look at gold on the April, it's also, which is more information there. You can again see the series of dojis right at the same level it bottomed out before. That might be the basing area. Let's see, is GF, that what's GF? Is that Peter? F.FC on here. So that you can see what happened in feeder cattle. This is the May contract. Still a little bit tentative. Now I've been trading the June hogs. You can see the massive move right here, and that's on the basis that there's the African swine flu going on in China. I may have mentioned this the other night. African swine flu may hit 1, maybe 2 herds around the world every year. And they don't have any cure for it. So basically what they do is they just kill off the herd and get rid of the carcasses before it spreads. Well, what's happened in China is it's hit and it has been spreading like wildfire. And China uses pork as kind of their main staple for a lot of their foods. So they have big demand for pork. So with the swine flu going on, that's what created this move. Then the profit taking, then it started back up. Now I just shorted it again today. I say again today, I had shorted it over here because it started selling off. That was on the June contract. So this is just to kind of illustrate the fact that that's April. That's missed. That's May. Going to kind of see the evening star signal setting up. So this doesn't necessarily mean it's going to crash all the way back down, but it might mean it's going to now trade in a trend. So anyways, that's got way off your feeder cattle. Feeder cattle looks like it's based. I'd be a buyer of it on positive trading from here and just don't let it close back below the T line. Justin, futures trade at different months. Now, in things like hogs and cattle, what you're doing is the farmers get an opportunity to be buying or selling some of their herds based upon delivering them in June. So they're selling or buying June or selling June contracts. But you have different monthly contracts for when you want to, or when products are going to be delivered. Now, in some of them, I can't remember what. Soybeans, that's a May contract. Oops. And that might be once every 3 months. So, anyways, that's John. Yeah, ask more of the. I know there's people that like to trade futures and want to know more about it. So when you're in the options room, ask it. That's where we kind of comment on the futures. PISA, I wouldn't necessarily go short. Well, yeah, you could go short on the basis that it could come back and fill this gap and see if the 200 is going to act as a support level. Okay, any more general questions on candlesticks? All right, if not, Jim, go ahead and do the double line. And in 4.1 seconds, do the next double line. All right. AAXN. Good slow curve breakout. You stay long, but I'd have a safety stop here. The reason I wouldn't put a safety stop here is because this is a little slow curve breakout, and you're right here at this level. If they trade positive from here, you got more upside. I wouldn't want to be too close on the stop or the safety stop. ECL, all you can do here is stay long with it trading above the T line. Zine, you had a spinning top doji. Put your safety stop right here. If it opens and trades below that, the stochastics just now getting up in the overbought area, that means they're coming back to test the T line. Etsy, nothing. No direction. It had the possibility of breaking out, which it didn't do with the evening star signal. I wouldn't be long or short this one right now, just because there's no direction there. AMRN, same scenario. Which direction is this moving? It's kind of negated. Remember, if this was the candle that told you they were heading up strong. Oh, dang it. The cat has brought in an animal. Okay, this cat is for sale. Now, the animal's under the treadmill. This is just going to go nicely tonight. When they closed it back below the halfway point of this candle, that told you should be out of this trade. So I wouldn't be long or short this one right now. STNE, when it traded back up above today's, or what is today? Friday's high on this doji, I would have closed it out. That's too much strength after a doji. And Roku, if you're short, stay short. But if it opens positive tomorrow, you've got to assume that everybody that's watching the 50-day moving average is starting to buy. So I would be buying or covering short positions on anything above today's high. Where did we go? Okay. ACB, nothing. No direction. ARQL. This one I'd be more apt to buy if it opens positive tomorrow, because you'll have that little kind of a trend breakout. So I'd be a buyer on positive trading tomorrow on this one. Darn animals are out. She figures she has to catch most of them. Pain, just stay long as it stays above the T-line. Now you're getting up here in the overbought area, so make sure that it continues to trade positive so the stochastics stay positive. ENLC should have been out of this one today. You needed to open positive and trade positive. Rambus, stay long as it stays above the T-line. May 9 calls, I would. Unless they open this positive and give you a good exuberant buying, I'd close it out, because right now, what's your direction? If you bought based on a positive open on Friday, yeah, give it one more day, but it has to open positive. IONS, just stay long. BABA, not a real exotic chart. If you're long, hang it. You can stay long. We're watching to see what happens at this level. Nugget. Nugget, you can see that it's kind of based. At least you can expect maybe if they open this positive to come up here, so you've got maybe 3, 4, 5 trading days of bullish move on the gold stocks. IIPR, again, what do I say? Real estate stock. It's not going to give you a heck of a big move, but you can see that it's heading back up off the Morningstar signal in the 34. A lot of people say, well, why do you use the 34? Because the 34 kind of has a high degree of indication of where a reversal could occur. So there's your Morningstar signal. I would stay long with the anticipation. As long as it stays above the T-line, you're eventually going to head for the top of the channel. Micron was just a toughie to trade. You can buy this on positive trading because you can see every time they open it, even though it's lower, they're bringing it back up. So there's buyers in here. Now you want to see it break out, especially through the 200. VIPs, stay long. Use today's low as your stop. ALNY. There's your dark cloud. There's another dark cloud. There's a bearish engulfing. Your stochastics rolling over. Guess who's starting to win the war here? This one you should definitely have closed out on a lower, or on the close below the T line. I wouldn't short it because you're in a slow uptrend, but I wouldn't want to be long right now. And AIT, all you can do here is stay long. Use the T line as your stop. Flare, nothing. You're in a wedge. So you don't know which way it's going to go. MLCO, there's your scoop pattern. There's your kind of your morning star, your doji sandwich, your breakout. Look for the trajectory to remain in that direction. No CHTE, Zig. Yep, so that's a lap. CHTR. You can get ready to buy this one. Same scenario. Morning star signal off the 34. Look for it to come back up to the top of the channel. Cat. Whatever it is, it's underneath my treadmill. Blue, having a hard time getting through this area. And you're running out of juice in your stochastics. So this is probably going to be a telltale direction tomorrow with the doji telling you which way it will go after they open it. Target, you got to stay long. Johnson & Johnson. Did they ever recover from their suit because of the baby powder? Right now, again, if you were short, you can see you're starting to see indecision right here at the 50. If they bring it back up through the high of the last couple of days, I'd close out my short position. That's good evidence that that's where they're buying. Facebook is just sideways. You can see the top of the channel, and they're starting to pull it back. If you're long, if it opens lower tomorrow, close it out because they're bringing it back at least to the T line, and for all we know, they're bringing it back down into anywhere in this area. To stay long, you definitely want to see it open positive and then get through this level. McKenson, nothing. If you're buying, I'd be a buyer if it came back up through the highs of the last couple of days. You need to see that it's moving away from the T line. NSTG, you can stay long on this one as long as it stays above the T line. The Qs, stay long. TJ, is this TJ Maxx? Just stay long as it stays above the T line. Marvell, same scenario. You just stay long on this one. Use the T line as your stop. The Sox, stay long. I would use today's low or today's open as my stop. You had a little hanging man and a bullish engulfing up here in the overbought area. Keep a safety stop at today's open. Snap was doing a nice fry pan bottom. Another one where you can stay long. Just have your safety stop probably at yesterday's or Friday's close. If it has enough strength to come back down through there, you're getting pretty close to the top of this channel, so you got to be a little bit more diligent at that point. Verizon, nothing there. Your stochastic's heading down. The bigger the signal, the more compelling. There's a change of investor sentiment. Right now, I wouldn't be long or short this one. DNA, stay long, but also be aware of the little hanging man harami. I wouldn't want to see it open lower tomorrow. AMD, it's got the prospects of coming back to test the T-line. Not making it a very good looking chart at this time. We did Labu. Labu, you want to see this open positive after it's bounced up off the T-line today. And Wob, not going to make a whole lot of money with this. And you've got a little evening star signal setting up here in the overbought area. If this opened lower tomorrow, I'd close out the position. Maxar, you can be buying it. Just watch to see what happens once it gets to the 200, which is also corresponding with the beginning of that fry pan bottom pattern. AMRS, you can stay long on this one. Just make sure your volume's hefty. CHRS, that's your almost your belt hold, but your message. Now, what you don't want to see when you see a belt hold or a message is it coming back into the trading range. This closed right at the trading range, which means it better open positive and trade positive if you're long. If it opens lower tomorrow and you're long, close out the position. That's not a good sign. Not a good bullish sign anyway. General Mills, nice little J-hook pattern. That one should probably go higher. SRCI, your doji today. Find a spot. I'd probably use the open of Friday, but if it came down through there, you've got an evening star signal setting up. The oils, still oils moving, still, yeah, I would still stay long. United Health, come on. Not anything wildly exciting, but it's moving in an uptrend, and you can see what's happening. Notice how the tails to the downside are becoming more prevalent. That means every time they knock it down, they're taking it back up. You can stay long, just watch to see what happens if and when they get it up to the 50-day moving average. I don't know what's happening. Procter & Gamble. Yeah, all you can do with this one is stay long. That's not really on this one. See if there's, well, more like right about in here. So you've got a nice little breakout. I don't think it's too late. Just, yeah. If I was buying on positive trading tomorrow, I wouldn't want to see it come back down through today's open. Labu we did after it supported here at the T-line. That's a good indication that the bulls are maintaining control. SYMC. Another breakout right through this level with a best friend. Look for more upside. I think we did McKinson. Yeah, you could be buying this one if it comes up through the highs of the last couple of days. All right, still got a good market trend, and it's good in the sense that if they open this positive, notice the nature of the trend. After they started up, profit taking, took it up, profit taking, took it up, took it up. Now you got some profit taking. As long as they keep it above the T line, that's indicating there isn't any exuberance yet coming in the market. And I know one of our speakers the other day said this market can't go straight up. You might have something like this. Wave 1, Wave 2, wedge, breakout, Wave 3. All right, everybody, have a good evening. We will see you bright and early in the chat room tomorrow. We'll see you then.